Today's edition of Toggle's Daily Video Insights. My name is Jan. I'm one of the co-founders of Toggle, and today and every other market trading day, we dive into one of the insights produced by Toggle across thousands of US equities. We look at changes in fundamental data such as earnings, sales, analyst expectations, and so on, and then we try to see whether or not that historically has had any impact on stocks in question and what direction that impact may be going into. If you'd like to see more of these insights, please subscribe to our YouTube channel, or else you can also check out Toggle at toggle.global and test drive it yourself. Today, the focus is going to be on Six Flags, a company many of you will be familiar with. And as you can see, Toggle has actually been highlighting a number of drivers that could be exerting bullish pressure on this particular stock price for a while. We haven't seen a big move as of yet, but the latest one that we look at today is seasonality, which suggests that there could be potentially as much as 4% upside over the following 2 weeks on the back of a positive drift that Six Flags typically sees around this time of the year. Now, to come to this conclusion, Toggle has actually analyzed 10 years worth of data and looked at whether or not there was a statistically meaningful drift over these periods, and it concluded that actually from the 47.80 price that the target price should be around 49.49, about a 3.5%, currently in fact 4% adjusted for yesterday's price total return. You want to see price stay within this confidence interval, and of course if it were to drop below the red line, this is a good point to put a stop loss level, or at least reevaluate the thesis. Now, why it might move, again, as we mentioned, this is basically an examination of the past 10 years worth of data, and as you can see that these points, with the exception of some, for example this one, have coincided with generally bullish period for the stock. You see it here, you see here, and so on. But then there were some periods of consolidation, like this one, and then also, as we highlighted, some periods where actually the stock went outright down. And so let's take a look at the past performance in graphical form. And what you can see here is there have been some periods where actually you made quite a bit more than 5%, although we really only could detect a handful. And on the downside, it was typically constrained to below 5% loss. So the goal here really is that over a short-term horizon, and you need to keep in mind that this is really just 2 weeks worth of returns. This looks like actually quite a compelling risk reward for this particular stock, assuming that it fits with your fundamental conviction and it fits in your portfolio. So much for Six Flags today. In the daily brief, we also deep dive a little bit into what is Dogecoin and why is it that it's so popular recently, because today is actually Doge Day, which is something that probably many of you might not be familiar with. So anyway, if you subscribe to it, it should already be in your mailboxes. If you don't, go to toggle.global and you'll be able to subscribe there. Thanks for your attention, and we'll see you again on Wednesday.